I think that the first thing to understand about Bitcoin is it's simply just a open, decentralized digital protocol. And all that means is that anyone with an internet connection can essentially use this open protocol. And so what it's used for is to send value back and forth. And so we use all kinds of different payment systems in the kind of traditional world, whether it's Visa, MasterCard, you can use all sorts of banking, ACH, Swift, all these different things. And what we find with something like Bitcoin is that there's two key, I think, improvements on those legacy systems. One is that it is decentralized, meaning that it is not controlled or owned by any one individual or organization. And also, two is it is a artificially capped, deflationary, hyper secure asset, meaning that no one can create more of it. And so I think in today's macro environment, what you're finding is there's two types of people who are basically finding this valuable. There are people who are using it as a store of value. They're saying the dollar is guaranteed to lose value. And based on Bitcoin's market structure of a fixed supply asset, if demand continues to rise, then you are guaranteed to have your purchasing power grow over time, have the US dollar price appreciate. And then there's a second group of people who are using it as a medium of exchange. And that medium of exchange essentially allows people to send money or value anywhere in the world at any time, near instantaneously for very low cost, without asking for permission from anyone. So if you want to send it to any other person with an internet connection in the world, you can do that. And so I think that those two key kind of use cases are really driving the growth of an asset that 12 years ago didn't exist. Today is a $700+ billion asset and kind of continuing to grow at a pretty aggressive rate. Yeah, well, the first reason why they're wrong is because my Bitcoin is not for sale, right? And so it doesn't matter what price somebody offers me, I'm not selling the Bitcoin. And so the greater fool theory would be that I bought it at a low price and somebody's going to pay me at a higher price and I'm going to give it to them. But that's just not the case. And it's not the case for many Bitcoiners. What they've done is they fundamentally shifted from a dollar denominated world to a Bitcoin denominated world. And I think that that's a really key piece. And you see this in the data in terms of 60+% of Bitcoin hasn't moved in the last 12 months. Even though there's been hundreds of percent of upside, there's been 50% drawdowns in a single 24-hour period. Through all of that volatility, 60+% hasn't moved. And so these people have a very deep-seated belief that this is an asset they're going to hold for the long period of time, regardless of what happens to the US dollar exchange value of it. And I think that when you start to really look at how do you value something like this, price is simply a determinant of supply and demand, right? And the beauty of this asset compared to most markets is that if we look at other assets, we essentially have to do work and our best estimate as to what the supply will be and also what the demand will be, right? There's two inputs into the equation to determining the price today and then what the price will be in the future. When it comes to Bitcoin, one side of that equation is not a variable. Right? We know with 100% certainty because we can verify in the code exactly what the total supply of Bitcoin is, what the circulating supply is, and what the daily incoming supply is. And so that verifiability of the actual supply side of the equation means that we have 100% certainty and we can kind of know what that input is. What that then leads to is an analysis on the demand side of the equation. And what people then want to speculate about or debate about is why is demand increasing? Why will demand continue to increase? And I think that that's where you get this spectrum of arguments, everything from store value to medium of exchange. I personally believe that Bitcoin is at least a 10x better improvement in the technology from a store value standpoint than gold. Many people probably think it's even higher than that, could be 100x or better. And so when you see that kind of very significant improvement from a technology standpoint and a store of value, what you're going to find is more and more capital will flow into the asset. And as demand increases for a fixed supply asset with a known supply schedule, the price will continue to appreciate. And so, 5-6 years ago, you could have made the argument, hey, there's not a lot of trading volume. This is kind of a speculative asset. The market may be manipulated. All of these kind of detractions that I think a lot of people did make. Today, when you kind of fast forward, what you find is you've got an asset that has tens of billions of dollars in daily volume. It's on regulated exchanges. It's held by many of the kind of most well-respected financial institutions in the United States. And the price has pretty healthy pretty high volume price discovery. And so what I think Bitcoin is worth is obviously what the market has determined. Today that's sitting around $36,000, $37,000. And then the big question is just how deep is your conviction that demand will continue to increase in the future and price will kind of be a proxy or a result of that increase in demand. Any asset starts out at a low price and then has volatility. It can go up, it can go down. If you look at something like Amazon, I think Amazon stock when they IPO'd in the late 90s was $18. Today, Amazon's price is over $3,300 per share. And that's not a straight line, right? There's all kinds of splits and everything along the way. Lots of volatility. Amazon stock at one point dropped over 90%. There's also kind of double-digit drawdowns on an annual basis. The average intra-year drawdown of Amazon stock is over 30%. And so when you have a highly volatile asset, the reason why that's happening is because there's innovation. There's a repricing of the asset, right? The world is trying to figure out what is this worth. And so if you had looked at Amazon stock at $18, you could have looked backwards and said, oh, I could have invested in the seed round or in the Series A. I missed it. Now it's a publicly traded company and there's going to be no returns. You would have been wrong. If you had then waited till it was 100 or 250 or 500 or 1,000 or even $2,000, you still along the way would have thought, oh, I missed it. But what you end up finding is for the small few assets that actually are disruptive, that are highly innovative, and that do benefit from true market price discovery, you aren't late. Actually, what ends up happening is you're probably underestimating the future price performance or the future appreciation. You're underestimating how addressable the market is. And so I think an asset like Bitcoin is a perfect example where what you're talking about is about 100 million people globally out of 7.5 billion people in the world. Only 100 million people have any sort of relationship, ownership, or interaction with this asset. And so what you're essentially saying is that 100 million people would be the total addressable market, that it's captured everything that it's going to capture, and there's going to be no one else who's going to want this. In fact, what we know, though, from history is that money is a very, very viral product, right? You have to send it to somebody. And so you're constantly bringing more and more people into a monetary network or a monetary system. And so I think that the belief that it's too late really just kind of refutes or ignores history. And then also is kind of a pessimistic view of the future. It's to say that all of the innovation is done, all of the people who need this have found it, and therefore there's no future kind of value to capture or create. And I just don't agree with that. Bitcoin's monetary policy is superior in every way when it comes to protecting purchasing power. And so now what we're actually going to do is we're going to digitize these fiat currencies. We're going to onboard billions of people with digital wallets. And then we are going to drastically reduce the switching cost. And so what people are likely to do is they're going to get paid in their native currency. They're going to switch into something like Bitcoin to protect their purchasing power as part of their savings or investing strategy. And then if they then have to pay for taxes or goods and services in their native currency, with a click of a button, they'll switch back and they'll actually pay for those expenses.